Hello and welcome to Daily Market Movements. Welcome to another episode of Indices Watch. In today's video, as always, we're going to be analyzing the Nasdaq 100 and the S&P 500 price charts. Just 20 seconds before I start today's video, I just want to say a huge thank you and welcome to everyone who has just joined our streaming service. We've had roughly 57 of you join us over the past 24 to 48 hours. So, again, thank you very much for your support. And for those who do not know what our streaming service is about, this is where we post videos on a daily a daily time period where we basically analyze the crypto markets, indice markets, US stocks, commodity markets, and we also post loads of educational content towards the bottom there as well. So if you'd like to receive trading signals from myself, this is what you have to do. Just head over to our website, dailymarketmovements.com, and then that's where you can then subscribe to our streaming service, and then you'll automatically be added into our Telegram group chat as well. And that's somewhere else where we distribute our signals. So we do it both via video and via our Telegram group chat to cater for all of your needs. But let's get cracking with today's video. In front of us, we have the Nasdaq 100. Friday, we continued our march towards the upside. If we just zoom in a little bit there we go. We had 4 positive trading sessions in a row. I think it was the last episode where I mentioned that we have had so many bullish trading sessions. You can only really spot maybe less than 10 red days here out of the past 30 to 40 trading sessions. So incredible here for the Nasdaq 100. Some fantastic buying strength. We did have that minor sell-off. You could even argue a correction because we did fall 8.31%. So we didn't quite get into that bear market status where we fall below 10%. But what we did do is we rallied rather significantly since that, since we bottomed all the way down at 14,400. And in fact, we have rallied a incredible 15.64%. So we've gained another percent this week. And it looks really like there's nothing really stopping the Nasdaq 100. But as the old saying goes, when people look greedy, be fearful. And then when people are fearful, be greedy. And at this moment in time, I think people are getting very greedy, buying up at these all-time highs. I can assure you that all this buying power that has happened over the past week, that is the retail traders, okay? These are people who aren't as well educated or, are perhaps brand new to trading and don't really understand how to use certain indicators or the cycle of the market. And there's nothing wrong with that. I was once one of those traders. I was buying in at the tops, but unfortunately, you will eventually get burnt. And you might be arguing, say, well, Max, hang on a minute. If you was buying with tops up here, well, look, we had this massive rally towards the upside. But don't forget, the majority of these retail traders are probably trading with very high leverage. And, any sudden small drop, like even a 2 or 3% drop like we saw at the end of last week, that could blow a trader's account. So please do be careful. If you are a retail trader, I really would advise signing up to the streaming service where we try and educate you more with regards to these cycles in the market. And we teach you how to use indicators like this down here. We have the RSI, which tells us whether a certain asset is overbought or oversold. Anything above 70, for example, is considered to be overbought. And right now, the Nasdaq 100 has a reading up at 74, and the S&P 500 has a reading all the way up at 67. So, Nasdaq 100 is already overbought, and the S&P 500 is fast approaching that level as well. So I do anticipate a move here towards the downside. Last time we were trading this high in the Nasdaq 100 was all the way back here in the on the 3rd of September 2020, and look what occurred then. We had this massive price pullback from 12,400 all the way down to roughly 10,000, and we saw a 14% correction here for the Nasdaq 100. That was last September, and it's been a long time since we've had a pullback of that magnitude. We had this one back in February where we pulled back around 11%, but we haven't yet pulled back to the same magnitude as we did back in September 2020 where we fell nearly 15%. So it is coming. I know it's very hard to think like that at this moment in time when the market just seems to go up and up and up, but eventually the market will throw a glass of cold water over your faces, and you will see a very sharp movement towards the downside. And again, unfortunately, that's where the majority of the retail traders get burnt out because they're trading with very high leverage. So my job is just to come on here and provide you with free YouTube videos like this one you're watching now to just try and warn you and give you the option to further your trading knowledge by subscribing to a service like mine, where I really do try and help the retail traders for such a small price of only $19.99. And I don't want this to sound like it is a sales pitch for trying to for trying to get you to subscribe to my streaming service, because that's not what it is at all. I really don't mind if you just come on here and support my channel and don't pay me any money, but just watch my videos, give me a subscribe and a like. That would be fantastic. So I really do appreciate all of your support. We've got 16,000 of you now watching my videos, which is fantastic. But as I mentioned, I'm very fearful for the Nasdaq 100. I think that we're only a very short time period away from seeing a very big pullback to at least a 50-day EMA. I currently have nothing open in the Nasdaq 100 or the S&P 500. I'm waiting for that pullback to then take advantage of. And don't forget, guys, the reason that the market has been so bullish throughout the past 18 months, why every single dip tends to be bought, and that's because the Fed has been pumping in $120 billion worth of printed money into the market. So every time a dip occurs, it has just been snapped up. But as of next month, that amount is going to start to get tapered. The Fed announced earlier on this month that as of December 2021, they're going to begin to taper that $120 billion what's been injected into the financial markets by $15 billion. And I personally think that's going to accelerate as we go into Q2 next year, and then eventually Q3 next year. I am anticipating them to start hiking interest rates, and that's where the Nasdaq 100 really will start to become volatile. If we head back to 2017 going into 2018, I think I showed you this on the previous episode that we did. This was when the Fed announced that they were going to be hiking interest rates for the first time in over a decade since the financial crisis, and within 3 or 4 days the Nasdaq 100 plummeted 12%. Not saying that that's going to happen the same this time around. This is not financial advice, but one thing I would say is that I have already traded through a interest rate hiking cycle, if that's what you want to call it, and it's not pretty. It's very, very volatile. It's very, very negative. And you really do need to know what you are doing to avoid, having large losses during a time period like that. But that's it for the Nasdaq 100. I thought I'd just come on here and just explain to most of my audience here who are retail traders to really do be careful and double think before you enter into this market here, because even if we did trade up towards 17,000, which would be a good move towards the upside, that's a 2.38% move higher than from where we're currently trading right now. But on the flip side, if we were to trade down toward the 50-day EMA, which is very possible, that's a 5.88% move towards the downside. So your risk management, you're risking basically 6% of your account just to gain 2%. It's just, the risk management isn't there, and we could easily pull back towards the 200-day EMA, which is a 13% move lower. Again, that's a move similar to what we saw back in September 2020. And if we did pull back towards the 200-day EMA, well, guess what? Most of the traders who bought in here will be like, okay, well, yep, that's pretty much fair enough. I'm still up 114%, where it's the retail traders that trade short-term, the day traders, that would get very hurt in that time period there, where we fall from 16,000 all the way down to the 200-day EMA at 14,500. So again, this is not financial advice, but I am just coming here and just sharing with my audience a warning that to be really careful and really to double think when you're buying at these high levels, because the risk reward ratio really isn't that great. And it's the exact same here on the S&P 500. The S&P 500 is considered to be overbought. Last time we were this overbought on the RSI, where were we? Well, it takes us back to September 2020, where in the S&P 500 we saw a 10% price fall. And if that was to occur this time around, where does that take us on the S&P 500? Sure enough, it takes us to the 200-day EMA. And that's something that I am anticipating in the short term. It might not happen this week, it might not happen the week after, or even within 3 weeks. But I do believe once the Fed starts to taper going into December, once we get these companies coming out saying, Black Friday sales weren't as good as they were last year because there's a shortage, our Christmas sales weren't as good because there's a massive shortage of chips or whatever it is, toys for kids, I do anticipate a sharp pullback here for the S&P 500 and the Nasdaq 100. I think it makes sense. We're up an incredible amount from those March lows that occurred back in 2020. At this moment in time, we're up 116% for the S&P 500. This is an index. It's not a single stock. This is incredible. A basket of the 500 top traded stocks in America are up 116% in the past 18 months. It's unheard of. And, you only have to really zoom out of this price chart to see how steep of a incline that we have seen over the past couple, the the past year or so since we had that huge sell-off that occurred back in March 2020. So again, be very careful, because if the S&P 500 was to trade up towards, let's say, 4,800, that only represents a 2.39% move higher. But again, if we trade it down to the 50-day EMA, that's roughly a 3% decline. So your risk reward isn't great. And of course, we could easily trade down towards a 200-day EMA, and that would be a 10% move, just like we saw back in September, where we did fall 10% as well. So, I don't want to come on here and sound all doomy and gloomy, and just put a load of negativity out there as we go into a new week trading. But I always like to be one step ahead, and I want to warn my audience, because I don't want you guys to lose money. I want to help you as much as possible, and to kind of warn you guys ahead of these moves. And I think that a pullback here to the 50-day EMA is overdue, and once it does occur, it will offer a fantastic buying opportunity. And this is an area where we can pick up some value, or even better, if we fell down towards the 200-day EMA, that would offer fantastic value. And if we brought it back up towards the all-time highs, I'm not saying it will happen straight away. It could take a month, could take 2 months, but that's still 10.66%. And when you're trading on leverage, that is an incredible amount of money. So I'm going to wrap it up there for today's video. Just thought I would tune in with you all ahead of the new trading week. Markets open later on this evening. And it was just basically me coming out warning you all not to go and chase the tops here for the S&P 500 and the Nasdaq 100, because that's how the big banks, the big hedge funds make their money. It's by the retail traders buying the tops, making the market go ballistic like it has done in the past couple of months. Because I can guarantee you right now, all of this buying pressure that we've seen in the past month or so was not that, it was not the smart money. It wasn't the hedge funds or the banks. This would have been retail traders buying the tops. They would have been watching YouTube videos where there's some clickbait thumbnail saying, yes, the Nasdaq 100 is going to rocket to 18,000, and you get the retail traders come in and buy the tops. So just be very, very careful indeed. But on that note, thank you very much for watching this video. If you would like to go and subscribe to my streaming service, again, where I have loads of educational content and more in-depth analysis where I explain my trading setups, etc., then please do head over to my website. I charge a very small fee of $19.99 to join, and it would be much appreciated. But if this is not for you, no problem at all. If you wouldn't mind just giving this video a thumbs up and subscribing to my channel. But thank you very much for tuning in for today's video, and have a lovely weekend.